Hey everyone, it's Joey, co-founder, CEO of Nook, and today we're going to be talking about base versus reward rates. So people have been using DeFi lending protocols, earning a lot of money, but it's a little confusing because it's not straightforward. One of those ways that it's not straightforward, I'm getting some questions, is what's the base rate versus a reward rate? It's kind of different than if you have cash in your checking account, you earn 4% back, it comes back in cash. That's a little bit different in DeFi. It comes back in base versus reward. So let's jump into it. So here's a snapshot from DeFi Llama. You'll see the total rate, you'll see the base APY and the reward. So I'm just going to mimic their language and use their language today between base and reward APY. And we'll jump into all that. But before we do, let's set some context as to why we're doing this. The TLDR is that there's a $100 billion plus market here in terms of people are earning high APYs, high returns, super simple. It doesn't require any trading, inside information, or being on your phone constantly, but it's a little difficult to use. And we think we can change that over time with better UX and just more information for more people, similar to what Robinhood did with stocks. Remember before Robinhood, very few people traded stocks. Now everyone does. And we think we can do that with Nook and with how you invest. The signs of progress are there. There's over $40 billion just in these DeFi lending markets alone right now. There's 83 million people across the world using this, so there's a good amount of people, but we think that could be 1 billion people. And there's high returns, 30+% APY per year means it's an entirely new way to invest and a good way to differentiate and diversify. So let's jump into it. So a base APY is a APY that returns in the asset that you lent or that you provided. So if you put USDC in, you get USDC out. Pretty straightforward. The reward APY is where it gets complex. That's a return in the asset of the protocol. So if you put USDC in, you might get this into the Morpho protocol. You might get or will get Morpho out. A good analogy I like to think of is if you were to put your cash in Bank of America, they would obviously give you cash back, but imagine there's an option to say, hey, you can earn 2 times the cash back, so 8% APY, but we'll pay you in Bank of America stock. If you're confident in Bank of America over the long run, or just in general, then that's a good deal, right? A little bit more risk in terms of Bank of America stock go up and down, but your principal is always safe. So let's jump over into how this works inside DeFi Llama. So again, I have another video on this, but this is how we look at rates. So there's some good rates here. I'm just going to say it up front every time. The very high rates mean it's not there to stay. I'm not saying it's really risky and you shouldn't do it, but I wouldn't rely on this. 22% looks great, but let's jump into this Morpho Blue rate of 6% APY. And so that's a combination again of the base APY plus the reward APY, but we'll see exactly what that means. So if we open this page up, we can see that the APY has been pretty consistent over the past couple months since March or so, with one spike upwards, which is great. You like to see spikes upwards. That means you earn a lot on that day, around 20%. But the big thing to focus on here in terms of the APY is the supply APY. What's it comprised of? So here it's comprised of the base token, not base as in Coinbase, but the base token, which is USDC in. So this is what's going in. So you'll get USDC out and you'll get the reward token. So based on this graph, you can just tell that it's 2 things, right? It's blue and orange. That means it's a combination of base and reward. Over time, it's been heavily reward, and then it's also been solely base. Not quite sure why that is, but I think right now it shows that it's a combination of the 2. So what does that mean to be a combination of the 2? Let's jump back into a few different definitions. So 3 definitions is a very simple lending protocol in position will give you all core. So if you put USDC in, you only get USDC out. The inverse of that is all reward. So it's only paid out in Morpho, or the lending protocol token, and the reward is not paid out in USDC. Or it could be a hybrid like we just saw, 70%, 30% hybrid, 50-50. It depends on supply and demand, and it depends on the market really. Let's give an example. If you put $1,000 in to this protocol, your base APY, for example, would be 4% and $40 after 1 year. And your reward APY would also be 4%. So let's say it's a total of 8% after 1 year. You get $40 in terms of USDC, $40 in terms of Morpho, which leads to 8% APY in total with $80 in returns. So 8% APY doubles what you see in Robinhood, doubles what you see in Betterment, Cash App, etc. Pretty good. but there is some nuances here. So what do we learn in terms of like the nuances and the breakdown here? So one, your principal is always safe, right? That $1,000 is always $1,000 in USDC. If you put it into a reliable, trustworthy protocol, which I've covered in the past, your principal is not going to fluctuate based on the reward rate. However, your reward itself, right? So that 8% could fluctuate, but it could pay more. So that 8% could become 10% or it could become 6%. If it does go from 8% to 6% over time, that doesn't mean that you lost your principal, right? Your $1,000 is still $1,000, but that means that you earn $60 versus $80. So that's part of the risk. Still, again, we're talking about relatively low risk, 1% to 2% drawdown on the gains, but not the principal. So something to consider as you look at these protocols and as you kind of suss them out. Next, let's take a look at Nook and see how you can tap into these lending protocols without having to go through all this complexity and self-custody wallets. Okay, cool. Now we're going to go into the Nook app to see how we can do it from the Nook app on an iPhone. If we open up the Nook app, you have two options. You can sign in or sign up. Let's hit continue to sign up. We break down the current savings rate, how you can earn in core and extra rewards, how it's safe by being collateralized, and how your Nook wallet's always yours. So the same premise of what we walked through on web with the Moonwell site, but a little bit more distilled down. Bear with me as I create a test account. That's a one-time code. I agree to the terms and agreements, right? So you're using Moonwell, but your funds are always yours. Let's go ahead and allow notifications here. And now we can see just the interface of the deposit screen. Clear breakdown of the past 365-day rate, the current rate, and your balance down here. If we tap learn more, we can see more here. But let's go straight into our first deposit. So similar scenario, we want to put $5 on, press continue, pay with Coinbase, let's continue, and we go through a similar flow of on-ramping. My wallet has already been created for me in the background, so I didn't need to go to coinbase.com. I'm logged in, so I can press confirm and purchase. It is buying crypto, taking that USDC, and sending it to my Nook wallet. $5 sent automatically redirects me back to Nook. And we sit tight as the USDC arrives and then goes into Moonwell. So there's no step of opening Moonwell and depositing Moonwell. It goes straight into Moonwell. Just takes a moment. And voila, we are done. $5 deposited straight into Moonwell, earning 4.8%. You can see I've already started earning down here, the details page, and then go to your account page or settings page to log out or export your wallet. And that's how we were able to get set up with Nook in probably 2 minutes versus 5 minutes in a much simpler, easier way. Thanks for watching. I hope you stay tuned. Talk soon.